Well, as some of you have already made your way into the lobby and into the webinar, this is the Catalyst Funding Real Estate Market Update. We'll just wait a few moments and get started. I know a few more people are still logging in, so we'll let them join us and we'll get going. If you're just joining us, we're waiting about 30 more seconds and we're going to start the Catalyst Funding Real Estate Market Update. Letting a few more people join. Everybody's making it to their desk, and this will go about an hour. If you're trying to gauge your time, we'll be done about top of the hour and cover everything related to the December real estate market. We're excited to have you here. We'll get started shortly. Okay, with no further ado, let's dive in. Welcome to the Catalyst Funding December Real Estate Market Update. Hope everybody had a great holiday season, and we're excited that it's 2023. We know you are too. And so with that, we have a real estate market update for you that we're really excited about today. As always, we have Catalyst Funding's founder and CEO, Wade Comeaux.
Everybody.
In addition, and in addition, we have Ernest Powell, our Houston area director of sales, and we have a special guest for you today. A number of you have heard of and are familiar with Michael Schwartz, Priority Title's VP of the Texas market. Welcome, Michael.
Thank you. Thank you for having me.
Absolutely. I'll say a few things about Michael. We work with his Priority Title every opportunity that we have, and he and Marcus and Natalie are outstanding. They give us excellent customer service. Our clients really love them. I think the biggest thing that makes them very unique is their responsiveness, their time to close, their ability to help remedy complex title issues, and maybe most importantly, whenever something may go slightly wrong, as things do in our business, the senior team is always a call away, and they really remedy those situations as quickly as possible. Very communicative and involved. So I can't say enough about Michael and the group over at Priority. So if anybody's looking for a title company, please give them a call. Michael, do you want to say anything else about what's going on at Priority that you guys are focused on, or any exciting news?
Well, a couple of things, just real quick, and then we'll get things going. And Wade, again, thank you for that great introduction. Love working with you guys. We are a unique title company in the fact we have some of the lowest fees in the state, but offer very, very high service. So it's not a discount service. It's a fairly based product built around great service. And we've really specialized in working with investors, doing all sorts of investment loans, depending on the situations, you know, whether it's fix and flip, buy and hold, novations. Our team's got a really good handle on the investor market. And if it can be done and insured, we'll get it done.
No doubt about it.
Absolutely. We're so glad to have Michael on the webinar. And as you can see here, he's been in the industry for a number of years, calls Austin, Texas home, and some of those key value propositions that he mentioned as far as what Priority Settlement Group of Texas, Priority Title can bring. And so with that, he's going to bring definitely some knowledge and some perspective on the December real estate market. With that being said, before we dive in, I'm going to offer a disclaimer. That disclaimer is that what we present here in this webinar is just for general information only. We hope it is beneficial to you, but no information or documents or any estimations presented here represent anything that that we want to guarantee a rate of return on investment or profitability based on this knowledge. And so by attending this, you agree that Catalyst Funding or any of our special guests do not assume any liability or for any loss or damage that you may incur applying the use of this information contained here. So with that being said, as you know, we've got Wade and Ernest, and we're going to dive into the December real estate market update. We're glad you're here.
Yeah, I'll introduce Ernest real quick. For those of you that do not know, he leads our Houston area sales team, and he's been a huge impact for us. He's been a loan officer for a very long time, so it's a great opportunity to congratulate Ernest on his recent promotion. He's made a huge impact in a lot of different investors' lives, helping guiding them down the path to really change their financial future. So very happy to have you on your first webinar, Ernest.
Thank you, Wade. I'm happy to be a part of it. Excited to help you guys out. I will cover the Catalyst value propositions. So one of the big things for us, we are a one-stop shop for hard money and permanent finance loans. We like to say we can cover for investor, any need you have for 1 to 4 units, we can cover it. And we're slowly expanding out our products to even cover more as well. We are built by real estate investors. So I would say a good portion of the people here are all investors themselves. So they understand the business from the inside out. So they make it an easy transition with dealing with customers. We've done thousands of transactions over our time frame in our personal as well. Going back to that single point of contact for your loans, it makes life easy when you can talk to one person throughout the entire process. So you don't have to get credit pulled multiple times, have to submit docs to different people. You have a one point of contact, so it makes the process easier for you, more efficient. One thing we're very proud about is our 5-star customer experience. We really strive to have that 5-star. So if you look at Google, you look at Facebook, a lot of the companies we partner up with, you'll see 5 stars across on the platform. So that is a top goal for us to try to keep that going reputation-wise. Like I mentioned, we do hard money, we do conventional, we do non-conventional, all your 30-year fixed, no income doc loans. We can cover all those for you. So any questions you have on that, we can help you. We also can go and do your primary refinance. We have a section that does purchases. If you're looking to do a cash out to do more investing, we can guide you through that process as well. Say the hard money loans and our VIP flip program is is a good program as well. This one I'm pretty excited about, the non-QM loans, and the FICO score is low as 620. That is rare to find now. A lot of those non-QM products are changing, going up to 680. So we still have a product on the lower end for 620, so we can help you out with that as well. And that is our value propositions for Catalyst.
Excellent. Next slide, please. Perfect. Thank you. So we're going to talk about a wide variety of things today, but an overarching theme that we really want to talk about is what's going on in the market nationally, real estate market, what's going on in the market in Texas, and some reasons that we really feel like Texas is still a very exciting investment opportunity. Some of the numbers are softening. I don't think that that's unexpected by any means. We had an incredibly short amount of homes, a shortage of homes. That's the supply-demand model that can really impact prices. Then we also had historically low interest rates. Those two things combined caused a real run-up. It was definitely stronger in Austin than in some of the other areas, definitely unreasonably strong in Austin, and we've seen that area pull back the most. But what we want to talk about today is why we and many others, especially the more savvy investors out there, are more excited at the moment than they have been in a long time. I think we're going to get some data that will help you understand why it's such an important time to be active in the single family and in other real estate investment categories. So what we want to cover first is Texas population growth numbers. And whenever you have a lot of people moving into an area, that's going to stabilize home prices and provide a lot of opportunities for landlords to have more people that want to rent your properties, which should increase the rent rates as well as decreasing vacancy. And we're going to show a lot of these numbers that substantiate that in a moment. But first of all, for anyone who has not been keeping up with the trend, like a last 10-year trend, very powerful on how many people moved into Texas. It was even greater last year. The population growth into Texas was the largest of any state in the union. And Texas crossed that $30 million population threshold last year and only trails California. And we'll show a slide in a moment that shows California is greatly decreasing and Texas is greatly increasing at the moment. And because of that, we think it's a real recipe to weather a challenging real estate market better than just about any other state in the country. Let's go to that next. Oh, I'm sorry. Before we go to the next slide, Ernest, Michael, do you guys have anything to add to that?
No,
Kind of excited about that next slide.
I would say, so looking at this slide, looking at Texas and Florida, and both of those are just under, 400,000 as far as growth. And compared it to the other states below it, it's almost, those two alone are just as much as other states. And then also, we've been doing a lot of hiring here lately, and I interviewed someone who was originally based in New York, there in Texas. But her first comment is that everybody's leaving New York to go to Texas and Florida. There's their main two places to go. So pretty interesting to see these stats on paper after having that conversation with her.
Yeah.
Well, and I'd like to add, pre-pandemic, we weren't supposed to hit 30 million as a population until 2026, 2027. So the fact, when I saw this the other day, really shocked. But the other piece too is being in Austin, you're 100% right. The brakes on buying SFRs for homeowners they're not pumped, they're standing on them. We've got the most active inventory we've had since 2007. But the good thing is, and I'm sure you'll get to this, but the good thing is the number of people looking for rental properties and the price of rentals as far as monthly income is going up dramatically.
Mm-hmm. Yeah, I think the desire to move to Texas because the robust job market, no state income tax, approachable home price, all those reasons are still there. So people are still coming to the area in droves, but they're making choices to rent rather than buy because they higher interest rates in many circumstances. And that's really good for many of our investors because they target that buy and hold investment opportunity. Next slide, please. So another important dynamic is if you think about where the people are moving from, they've had significant appreciation over the last decade. They're used to paying a significantly higher price for homes. So they have a lot of equity and they often come to the state and they're like, I used to have a 1,000 square foot home that I paid, $1.5 million for. I could come down here and basically get a mansion for that price in great neighborhoods. And it's really helping to fuel the appreciation here because you have so many people moving that are at higher price points, a lot of equity, a lot of money to put into homes. And I think that that's going to help weather that storm, even though it's not as hot because of the higher interest rate market. I think that it's going to continue to help us weather better than other places. So if you look at where people are moving from, New York being number one, that's a very high cost area. California, very high cost area, two of the highest in the country, I think arguably the two highest, depending on the metric you use. And then Illinois, not quite as high as that, but still a higher price point area. Some of those towards the bottom are not very high, but the majority of people moving are definitely moving from high cost areas, and that's really helping Texas and Florida and some other states getting that influx, weather that storm. Michael, I know that you've been in Austin for quite a while and seen so many people moving into that area. Anecdotally, where are you seeing the majority of people move from, and or do you get a feeling that they're willing to, what we might think, overpay for homes over there?
Up until last year, so all right, let me adjust the first part of this. So surprisingly, the largest number, and I'm just doing this by driving around town looking at license plates that I've never seen here in large amounts before. We have a tremendous, New York would be the largest, right? Which occasionally you'd see a New York plate here, but you know, it's pretty long haul. They're all over the place. Pennsylvania would be the next one. And why Pennsylvania is not a dramatically high cost state, when you factor in the income tax that they have to pay to the state, I mean, almost all of these states, you know, maybe not Louisiana, but the rest of them on this list, they're all income tax state income tax. That alone is a huge bonus for anybody that can transfer or move here. So yeah, I'm definitely seeing, you know, people from the Northeast and from the Northwest outside of California.
Ernest, anything to add to that particular slide?
Yeah, I just add on. So two parts. I had a house in Dallas we recently sold, but before we sold it, we had a neighbor move in, and she was from California, and she had enough equity from her sale in the California house to come and buy the house she purchased with cash. And then she ended up buying two houses next to it as well with cash and became a landlord because the cost of living was so much cheaper. So that was interesting. And then we went to California a couple months ago. We did like a little tour of San Francisco. And one of the guys on the tour bus like, let's count how many U-Haul trucks you see on this tour. And it was literally over 10 U-Haul trucks. You can see they're moving out like every day. And so now you kind of see that trend of where they're coming to, like Texas, the hotspot for them.
Yeah, I actually read an article, it might have been the Wall Street Journal recently. I was talking about how people are being compensated by U-Haul and other moving services just to drive a vehicle back to California and New York because they don't have enough people. It's all one direction, right? So they're hiring contractors to drive them back so they can have more people able to move and have the vehicles over there. So it's a very interesting dynamic. All right, this next slide is this Move Buddha is a very interesting website that Derek, our marketing manager, has found. And it's interesting because it really breaks down uses a lot of different data points, but it breaks down the most popular urban areas to move to. And very interesting, not surprising that Dallas, Austin, San Antonio, and Houston are all in that top 10 to 14 area. You know, Florida, as we've heard a lot, very popular as well. You can see that we've got some states like North Carolina, Tennessee, but still in that category of business friendly and you know, low income tax states where people are moving. But very exciting to see for the biggest areas where we see our Texas borrowers investing being very high on that list. Anything to add to that, guys? Okay. This is just, we'll cover this slide very briefly, but we thought it was interesting. There was a view in which cities are most popular and in some smaller towns. Katy, you know, Houston is very interesting. The epicenter of Houston's been moving further west over time, really moving away from like downtown and further west, energy corridor, and Katy's just blowing up. And then also, I think Derek may have mentioned this because his hometown is Tyler, so he decided to throw that in there as well. That it's one of the fastest growing U.S. cities. So like Tyler could be a great place to invest as well. So this next slide, if you guys don't mind going to that one, and I was going to ask you, Michael, I don't know what you're seeing or hearing regarding building permits. I know there are a lot of people building spec homes there in Austin, trying to take advantage of the huge uptick before the rate change and the market softening. What have you been hearing about the permit in the greater Austin area?
Permit requests are down across the board. Builders for the last 2 years weren't allowing, not only were they not paying commission or real estate agents, they weren't allowing, if they knew your client was an investor, they were actively turning them away. Like, no, we don't want investors. We don't want to make deals. With the number of permits down, the number of sales down, builders that have been building specs, individuals that have been building specs, I mean, they're throwing overpriced commission at people. They're begging investors to come in. They're sitting on a glut of inventory. So I think we're going to see a decline on new construction residential permits, probably up until at least the beginning of the summer. So, back end of Q2, start of Q3. I don't know what it looks like beyond that, but it is definitely, there's a lot of inventory out there that's being directed towards investors now.
Yeah, we're seeing that. Ernest, I don't know if you're seeing that as well, but there are some people that are definitely looking at, that new home inventory at the right price point. Of course, you're not going to necessarily do a buy and hold on a $1 million home. That's not the target price point. But there's a lot of new construction in that more approachable area where you can get some cash flow. And so I know we definitely have some investors who have been doing new construction for a while, and I think there's a real opportunity there with some of these discounts that are out there. Ernest, are you seeing any of that?
Yeah, absolutely. I've had a bunch of customers who are skipping over doing the investment properties that needs work done to them and just going straight to new construction. An area small, 3-2, like nothing special, but they make sense to get into. Those are brand new properties. You don't have any issues with them for a while. So we've seen a trend come out on that a lot lately.
Yeah, to your point, they'll have a new home warranty for a year. A lot of other things are going to be under warranty that might not be, roof, mechanicals, AC, appliances. So there are some real compelling advantages of that, even though you're not going to get as much of a discount as you would on a typical investment property where you get that significant equity capture. Your repair cost for the foreseeable future should be significantly lower, which is a real value add. And if you're a busier investor, maybe you're investing in an area that's not in your hometown, that can be very attractive. All right, this next slide we're looking at is going to be talking about the housing starts and permits. So one thing that I think tells a very compelling story about the Texas real estate market is that new home builders are hitting the brakes, right? In pretty significant numbers, especially in Austin. Not as great in Houston, which we'll cover in a moment, but they are hitting the brakes because there's just not as many people buying homes at the current interest rate. So they're trying to react to that, which honestly is healthy in many ways because I think it's going to help keep up prices. So if you look here, the housing starts from November compared to October is definitely below the estimate that everybody was anticipating. And year over year is also a pretty significant difference. So whenever you're looking at the housing starts on single family, there are some significant drops that tell you, if you're a smaller time investor, you're not building spec homes, but you're thinking about flipping properties, you have to be cautious about that, right? Because whenever new home builders are slowing down, flippers need to be cautious and you have to get really good deals. The good news is we're seeing a significant drop in price points, both on the buy and hold deals and on the flips that investors are able to buy. We covered this last month, but I will repeat it, and the numbers are still trending in this way. On buy and hold investor price points, prior to the rate increases that happened earlier in the middle of last year, investors were able to buy properties at about 90% of the after repairs value. So I'm going to do some quick math on that. If it's a $300,000 home, they were paying about $270,000 less whatever repairs were needed, right? So if there's $30,000 in repairs, they'd be paying about $240,000. That's a real premium. They're getting great rates, still getting the cash flow. They're paying a premium. We evaluated the last 60 days of data last month, and the data is still in line with that. Those same investors were paying about 72.5% of the after repairs value of that property, less repairs. So that number is significantly lower. You're talking about a shade, in between $210,000 and $220,000 on average. You're talking about a massive difference in the price points investors are getting. We're seeing that really take down the cash out of pocket. Across the state, we were trending the average investor was putting about maybe $40K out of pocket whenever rates were super low. We're seeing deals where there's no cash out of pocket, maybe 10K, sometimes 15K if it's a really compelling area, but significantly different out of pockets, which really is a huge driver in your cash on cash returns, which was what makes the biggest difference. If you can buy 3 houses, even if you're getting a little bit less cash flow now with the same amount of money, that's a huge difference. Cash out of pocket is just a big driver in what investors really look at. So exciting numbers out there. Ernest, I know you're in the trenches every day looking at deals with your loan officers. What are you seeing as far as cash out of pocket on those deals?
I was going to say the same thing. Like the early part of the year, to get a deal with no cash to close was like a home run. Like you didn't see them that much. And now I have some borrowers who have very limited capital, who usually do one deal and be done. They're now squeezing out 2 or 3 deals with the minimum cash they have because of minimum cash in the pocket. So it's benefiting a lot of the investors.
Yeah, it's really changed the game for a lot of investors there. And as we've said the last couple of meetings, you're not locked into that rate forever, right? You may have some prepayment penalties or something, but if you can cash flow at 7, you're going to crush the cash flow if rates get down to 5 or 4. We're going to talk about interest rate projections a little bit later in the report. This is a pretty interesting slide here, talking about the heat map and where the permits are going for multifamily. So we covered the single family permits. They're obviously down. We didn't have a slide on it, but Austin permits are down the most. Houston, not down that much on the single family. But this is very interesting. This is a multifamily permit heat map. So if you're a buy and hold investor, just like if flippers, they want to look at what new construction people are doing, because that's your market. You're looking for an end buyer, right? A great way to understand where the trends are going. If you're a landlord, you're going to buy single family, you're going to buy small apartment complexes, you're going to buy big apartment complexes. Seeing what the very well-educated, scientific investors are doing in the multifamily space gives you a good indication of where your opportunities for future returns are going to be if you're a landlord. And look at these numbers. Year over year in Dallas-Fort Worth for permits went from on multifamily 16 to 21,000. That's a big increase. Big increase there. Houston up 70% from 10,500 to 17,600. Really big increase there. San Antonio, look at that number. 3444 to 9919, like a massive increase there. And then Austin, down a little bit. So Austin is definitely the area who's been impacted the most. But that's also not we don't see buy and hold investors doing deals over there because the single family homes are so expensive, the numbers don't really work. Obviously, you can make the numbers work on multifamily, but not as easily, and that's why that market is definitely the softest. Then right below it, you compare to the single family numbers. You see those permits are going down. Dallas, 34 to 33. Houston, 36 to 39. Very slight decrease on this particular report. San Antonio, down pretty significantly from 10 to about 8,000. And then Austin on single family permits, down significantly as well. But very telling that the landlord type on a larger scale investors, the multifamily investors, are breaking ground on significantly more properties today because they know huge influx of people moving to the area, strong job market, but not enough of an interest in these people to buy a single family property and lock into that interest rate for a long time. So there's going to be a lot of people looking to be tenants. Ernest and Michael, take a little bit of time to talk about this slide and what you think about it.
For the investor, right, that wants to build multifamily, let's just carve Austin out as the anomaly here. I mean, just look at the opportunity across the board, and I mean, San Antonio and Houston, the numbers, well, even Dallas, right? If that's your niche, now's the time to do it. I mean, it's obviously the market is ready for this type of property. It's going to be a long time before, SFRs turn around. you know, I just think there's great opportunity, and if that's your product, now's the time to get in on it.
I think it's interesting just watching different trends. We look at when we're in COVID, people were trying to move away from multifamily, their actual consumers, and they wanted to have their single family, have a space because of what COVID brought with it. And now to see everybody kind of moving back into that space, it's interesting to watch those trends go up and down.
Yeah. I think there's still probably a real desire for people to have a little bit more space, especially because so many people are working from home, either part-time or full-time, and you know, people probably still have fresh memories of how you can't go to shared spaces as often whenever something like that happens. But I think interest rates are just at a point where it's a challenge, and people are making a tough decision to say, I'm going to wait a little bit longer. I do think whenever rates turn, there's still going to be a huge desire for those single family properties, but it's just going to be tamped down until we see that rate adjustment, which is inevitable, right? It's just a matter of time, just a matter of when. So this is, if you guys have ever had the chance to deep dive the Texas Real Estate Research Center report from Texas A&M, great information. We don't cover all of it, but this is a very interesting slide that just covers the housing starts month over month, the active listings month over month, total housing sales, median home prices. So you see the median home price in Texas down month over month, 1.6%. Housing sales down 7.4%. That's a pretty significant number. Some of that, I think, is seasonality. Keep that in mind. I mean, the last 2 years were an anomaly. There's never a time when you sell as many homes in, you know, the winter months, in November, December, as you do in the summer months. So it always trends down, and that's not unlike this year. But it's also because of the rates slowing down a little bit for sure. This does also talk about the construction permits dropping below 10,000 units for the first time in 2 years. But very interesting, that's still number one in the nation, and about 12% over number two, which is Florida, about one additional permit for every 9 permits. So it's still a very, very hot market compared to the rest of the country. And that's, you know, those migration statistics are a big reason why Texas still has the highest number out there. Also interesting how it talks about how Dallas contracted more than 700 permits, falling to a 3-year low, while demand in Houston stayed steady. So, you know, it's slightly different numbers we saw in the other report before. This is a little bit older, more dated data because it's from October, but Houston is definitely staying the strongest in the desire for single family permits out there. Anything else on these slides, guys? All right. So I'll talk about this real quick and then turn it over to you guys. But basically what this slide just shows is it started at 2000 with a baseline of matching up Texas and the rest of the country as a steady state. Like this is the normalized market for how many homes are sold. And it's really interesting to see the acceleration of number of homes sold in Texas, and even though the market's going down, that it has just really widened the gap from the national sales numbers over time. And that's why, you know, it not only on new homes and migration, but just the number of turns in Texas has been a very exciting number. But there is a downward trend for sure. And then the median existing single family home prices as well. You can see that downward trend happening there across the country and also in Texas, of course. So, you know, Michael, I know you were talking a little bit earlier about the home prices that you're seeing there in Austin. I know you do business across the state, but are you seeing any specific differences? I know you mentioned earlier new construction, that agents were doing some interesting things, or I guess the new construction builders were making some very attractive offers to agents. What are you seeing in the resale market? Are there any trends in what sellers are doing there to attract people in a softening market?
You know, so yeah, there's quite a few things. So the market changed dramatically from, July of last year to today. Existing inventory, resale homes, prices are down across the board about 23%. And they're expected to go possibly another 5 to 8% down, which, puts them nicely in line with if you're a payment shopper, right? With the interest rate where it is now and the decrease in price, you'll still come away with the same payment, even at the higher interest rate. You just don't have to go cash over, the asking price. And so sellers are doing all sorts of, they're back to doing, closing cost concessions, concessions for maintenance, for deferred maintenance, picking up home warranties again. So all the traditional stuff that happens in the normal market, the incentives are back in play. And the fact, and this is the unique thing, before, if you wanted a house and your budget was X, well, depending on the factor of 20 to 25% cash over asking, which was the average here, you had to look at your price plus that and factor it in. And so if your ideal neighborhood was Twin Creeks in Cedar Park, the likelihood to get there was not, you'd probably have to go 20 to 25 miles away to achieve that. Now that you're not having to throw cash over asking, people are willing to negotiate price and everything else, there's active inventory in your ideal neighborhood. So now that the urgency isn't there, people are taking more time. Days on market have quadrupled. We were averaging in a lot of areas here under 5 days on market. And, we're 25 days on market in those hot spots and 30 days on average. So we're coming back to, again, what I call a normalized market, and why it's not going to open up. The prices still got to come down a little more to make it a good investment market here. If you're just looking to buy, and get in a house, then you're great. You can actually get a house and be in your school district. The investment opportunities, I still think, are in the 3 other major markets around the state.
Yeah, I tend to agree with that. Austin in particular, unless you are going to build or remodel multiple unit properties, at least in that probably absolute minimum 2, probably more closer to 4 units or more, it's definitely a challenging market. I'm not going to go through each of these, but I'm going to go on a high level over a couple things. And what we wanted to cover is the rate changes from the Federal Reserve here over time, the increases that we've seen, where we started to where we are. So we started off at like 1/4 to 1/2 up to 4 1/4 to 4 1/2 with a significant amount of rate increases. There is another meeting in January, and then I think that there's a month off in February. So I'd be surprised if it's not a 1/2 point increase again in January. And while that's not a direct correlation to interest rates, it is definitely, we've seen the trends stay relatively in line with what the Fed does as far as the average mortgage interest rate. So that is something to keep in mind. But with this particular report, it is a recent article in Forbes that kind of showed some projections over time. And many of these prognosticators are saying that the rates could be in the 5s, some saying staying in the 7s over time. So I think one thing to keep in mind whenever you're thinking about interest rates is that nothing is going to be there forever, right? The question is, what's going to motivate the Fed to change their upward trajectory on interest rates? And I think it's going to be the perception of a recession and inflation slowing down. We're starting to see trends in both directions, indications of recession and indications of inflation slowing down a bit, which is what the Fed is driving for. So I do think in the not too distant future, we should start to see some relief in that category. I just don't think it's going to be in the, Q1, maybe even not in Q2. You guys have anything to add to that?
Yes, looking at rates. Or go ahead, Mike.
All right, go ahead, Ernest.
So I've been looking at rates just so we pricing out loans. So looking at them now, they're probably it's pretty close. They're in the high 6, low 7s, and they all have origination points associated with them. But that's the range here right now, that high 6, low 7 area, about 2 origination points.
It was about 4 or 5 weeks ago, Marcus and I were sitting in a presentation by one of the VPs of the Dallas Fed, and he was very clear that this is his opinion, not the Fed's, but that they probably won't stop hiking rates until we see about 4.5 to 4.7% unemployment. And for the last quarter, we've held right at about 3.7%. So he called it slack in the rope. He goes, we've got about what equates to about 1 million jobs in this country that essentially need to go away for them to stop, to hit the number to ease inflation before they'll start, considering to stop raising rates. Which was rather shocking, right? I mean, you're talking about 1 million jobs. But, he said, that's about all we can predict. He goes, we don't control much else. And like you said, while the Fed overnight rate doesn't directly affect interest rates, people follow them. And so he was saying, look for March to see where February's numbers come out, because that will give us a full year of this inflation fighting they've been doing, and they will probably reevaluate then.
Yeah, that's telling. My estimate of maybe the next 2 quarters may be a little aggressive because that's a pretty big increase in unemployment numbers. But I guess we'll only know in the future. The good news about real estate investing is that as long as you're getting your cash flow in the moment, that's the main determining factor. And if you get in at a higher rate, as we discussed earlier, whenever rates do inevitably come down, you can really make outstanding cash flow. I think let's go on and jump to the next slide. That's okay. So this is the rental vacancy rate. And why I think this is very important is if you look at the rental vacancy rates, they're the lowest they've really been since like the 1980s, early 1980s. And if you think why rentals were so in demand then, the other commonality is that interest rates were very high in the 80s and late 70s because inflation was so high, and they were trying to counteract that, right? So late 70s, they started to increase interest rates, but inflation was just through the roof before that. And I think people were very apprehensive, uncertain market, and it's very comparable to that right now. People move towards things that are not long-term commitments and they're often not willing to buy as much. So as you can see, it's a great time to be a landlord because you should be able to fill your properties very quickly and at strong rent rates. So this is a very exciting slide if you're looking to get into the space or if you're currently in the space of being a landlord. Ernest, what are you seeing on this slide? Anything else jumping out?
No, so make sure. So you're saying because of the high rates, it's causing the vacancies to go down, and that's compared to the 80s? Makes a whole bunch of understand the trend.
Yeah. Moving away from buying, right? But there's still people love to be in people have to have a place to live, and the population's growing.
So it is great then for our investors because it creates more opportunity for them to be landlords and buy more properties.
For sure. All right, this next slide, we've covered interest rates quite a bit. Rates are definitely up, I'm just going to talk about this one briefly because Michael, I don't think we're going to make any better points than Michael made a few minutes ago. But if you look at these rates, while they seem a lot higher than they were very recently, they are. But I mean, honestly, before 2010, rates were never really this low. And the thing that is factual, there have been people investing in real estate throughout that entire period of higher interest rates. And all the people that did it, they probably bought at a point where they could cash flow. And then they had all that appreciation that has happened over those periods, whether you bought in the 60s, 70s, 80s, 90s. If you did that, you have a ton of equity in your home because home prices have just been steadily increasing this entire time. Trying to time the rates is difficult. This slide is very interesting because what it does is it charts U.S. population. You can see this this going up significantly over time. This is covering 1994 to 2022, but the population was 250,000 or so back in the early 90s. Now it's way up to over 300. I'm sorry, 1,000 million. So now we're close to 335 million, right? And the thing that's amazing is look at these housing starts. Whenever there was significantly less population, we were building way more homes until 2006, like a shocking difference. And then we've been building exponentially fewer homes for ever since 2010, 12 years. And then even last year, whenever it seemed like housing starts were through the roof, we weren't anywhere close to where things were in 2006. So that is the biggest reason why I feel most people feel very comfortable with the real estate market. Interest rates are definitely tamping down interest in new home buyers, but there's still an enormous lack of supply because of this chart right here. And whenever the rates are inevitably brought down because recession and unemployment kicks in, like Michael was talking about earlier, these trends, there's still going to be a shortage of homes, and there's going to be competition, and there's going to be a lot of reasons for home prices to appreciate over time. Any other thoughts on this chart, Michael?
Just to reinforce what you said, right? I mean, this, with where rates are now and where the housing shortage is, I mean, what a great time to be an investor, right? To have either the nerve or the experience to jump in, because there's not, I mean, this just shows upside potential, both in equity and in increased return on investment with cash flow. That's what I'm seeing in these last two slides.
Absolutely. Ernest?
Same for me. So we're playing catch up. It's a supply and demand. So we're trying to catch up to the population. So not enough houses pretty much. So we're trailing behind. It's good for an investor right now.
Okay. So we're going to go through each of these slides relatively quickly. We covered a lot of this information earlier in the fact that home prices are definitely softening. Look at the sales numbers from a year ago to this month, down 30%. Now, keep in mind, if you compare this to 2018, 2019, these numbers are relatively in line, but that's just an historically unbelievably high number in November 2021. Dollar volume also down about 30%. Total active listings up 50% year over year. That's supply and demand number. But still, you get those total active listings in November 22. I've looked at the numbers comparing back, pre-COVID. None of these numbers are outrageous. It's the year over year numbers that look pretty concerning. But if you go back in time, it's not really that big of a difference. It's year over year, home prices are still up 7%. But as we showed earlier, month over month, there is some softening in all these major cities that we're talking about. Not unusual this time of year, and also not unexpected because of the elevated interest rates. Ernest, you do tons of business here in Houston. Outside of this, what other thoughts do you have on the Houston market? What are you seeing out there?
It's good. The Houston market is stable right now. There's so many reasons people are moving to Houston, so many advantages from a work standpoint. So I don't see a drastic change, or I don't have a concern for Houston at all. Like, it's a great place to be at this point in time.
So, Michael, I'm going to get your input. You know, you're a lot closer geographically to San Antonio on this next slide. Whenever we cover it, you know, a lot of the trends are not unlike we've been talking about. You know, all down over last year. But what are you seeing in San Antonio in particular? I know it's a more attractive price point than Austin. Are some of the people trickling that direction?
Absolutely. Anybody who has the work from home option that's relocating to Texas, they are opting to go to the suburbs of San Antonio and even, you know, the west side of San Antonio. I remember going into broker shops, you know, getting prior to this boom, prior to, you know, just coming out of COVID, and they were talking about the phenomenon of Austin and that, you know, why they would love to have some of it. They all knew they wouldn't. And then for 18 months, they got drawn into it. I mean, if you drive from Austin to San Antonio now, there's one little area that has a blank spot, and that's because it's a giant quarry. Other than that, it is completely built out down the I-35 corridor, which I didn't think I'd see in my lifetime. I mean, that's really happened. But, you know, the San Antonio market is soft. Some of the best price points for rehab properties are in that city. It is a major, major untapped gem for investors. People are just discussing. I liken it to Austin 10 to 15 years ago. I mean, $70,000, $80,000 price point homes that you can pick up, and they're, once you're done rehabbing, you know, they're worth 100 and a quarter to 150, and your rents very, very competitive because they're closer to downtown. And San Antonio is doing a major revitalization of the downtown area right now. It's pretty amazing.
Yeah. Ernest, I don't know if you're picking up on this, and I don't know if it's me or Michael, but is Michael breaking up a little bit?
No, I hit on your end more so.
Okay. Well, then do you mind taking the next few slides if it's an issue on my end?
Okay. So we already did San Antonio, right?
Yeah.
Do the next slide. All right, so this is the Austin area. So it looked like the median sale price is right at $467,000. So that was the same, no change in that. Closed sales are just over 2,000, so that is down 36%. And then we see average days in the market was 58, and now it's at 36 days, so that's increased. And then look at new listings, just over 2,000 or around 2,500, so that's down 17%. And then looking at active listings, right under 9,000, so that has increased by a lot, 225%. And then the pending sales, of course, down 38%. So total sales and dollar volume, that is down 36% to 1.17 billion, which is a huge number. And then the months of inventory, sitting just over 2 months. Oh, it was at 2.3, now to 3.1 on that. So that covers the Austin market. Anything you guys want to add to that one?
I'd love to hear what Michael thinks. You know, you covered San Antonio a bit. I know you covered Austin, but maybe one big takeaway on where you see things going for 2023, Michael. Like, what's your biggest takeaway for Austin in 2023?
I mean, if anybody's going to look in the Austin MSA, I would be looking at Pflugerville, Georgetown, moving out towards Bastrop. You know, the rest of the area, highly congested, highly competitive. You know, unless you get an estate sale, there's not going to be a lot of meat left on the bone. But in those areas, there may be some opportunity. We're just too tight of a market. I mean, you really got to want to play the long game and throw some money out if you want to invest in Austin right now.
Yeah. Okay. If you guys can hear me okay, I'll try and take the next slide, Dallas. Can you hear me okay, Ernest? I know I was having a little bit of difficulty for a second. Okay, perfect. All right, let's go to the next slide and cover Dallas. So Dallas is a very interesting market. You know, it can be a little bit more challenging on single family investments, but we are seeing people, especially just a little bit outside of you know, the most expensive areas, pushing a little bit more further outside of the city center, or areas where there are really some great opportunities. And then a lot of the Dallas investors are doing deals in, you know, Houston and San Antonio as well. We see quite a bit of that. But the home price year over year up 8.4%. The active listings up 155.7%. That's a really big number. It's not quite as big as what we saw there in Austin, but still a very big number. Months of inventory up from 0.8 to 2.4 year over year. But keep in mind, these are all against historically high numbers. I think Dallas is still a very strong market overall, and the home prices have not gone down that significantly. At all in any of the Texas markets, and even there in Dallas, you see 8.4% year over year. I do know the month over month number is down slightly, as we see in some of the other major metros, but certainly nothing to be overly concerned about, and not unusual for the season now that we're seeing right now. So I still think some good opportunities there in Dallas. You may just have to push outside the city a little bit. Ernest, I know you are working with a lot of our people up in Dallas. What's the word on the street up there?
Same what you just said. So they are having a bit of a hard time finding deals to purchase from a cash flow standpoint. But I think the goal in Dallas is the long play, trying to get the equity capture on the long side of it. I do see a lot of them moving on the outskirts of Dallas as well, trying to get cheaper properties there. But these numbers are in line with what we're saying pretty much.
Great. So we are right up against that. I know we want to get a few questions in. One more slide here, the affordability index. I'm not going to ask for comments from you guys. I just want to make a couple quick points, and then we'll turn it over to questions. So Derek did a great job of putting these two slides side by side. I want to explain very quickly what they are. The chart on the left is the affordability index for last month. What I think is compelling here is where Austin, Dallas, Houston, and San Antonio are ranked. So San Antonio, 23rd most affordable city of the major cities in the U.S. We've got Dallas, 32nd most affordable, most unaffordable. I'm sorry, I'm saying that in reverse. It's actually an unaffordability index. Houston is the 43rd most unaffordable, and then you go down to San Antonio, number 55. And you think about the amenities in Dallas, Houston, San Antonio, compared to those amenities really compare to the top 3 or 4, which are completely unaffordable whenever you look at these numbers. What's interesting is 2021. If you go to 2021, you see where Austin, number 20, Dallas, 21, Houston, 22, San Antonio, not on this particular chart. But what's amazing about that is how much more affordable the Texas markets have become in this time frame. So if you thought it was a really good investment before, it's even better now, because those home prices have gone up even more exponentially in some of these other markets. So I think that that's a very compelling chart, and also gives an indication of, we've been kind of saying for a wide variety of reasons why Texas is attractive, but this is always a great indication of markets where it's going to be tough for prices to continue to go up. And I think this is very exciting for these the major metros in Texas. And honestly, if you look at it, tons of other areas in Texas that are still very attractive outside of the major metros. All right, Derek, I think we've got a couple questions. We got like 5 minutes, then we got to let our people get back to work or lunch or whatever they're doing next, right? What do we have?
Right, we do. We have a couple of questions, and then we'll announce the winner of today's drawing. So the first question is related to the migration stats that we presented earlier. We have Lamar asking, how long do you foresee all the movement to Texas happening? As he says, the droves continuing to Texas is how Lamar words it.
I'll make a quick comment on that. The affordability index tells the story. Texas is more affordable today than it was a year ago compared to the rest of the country. And this does not bake in everything. This is just housing costs. If you look at gas prices in New York and in California versus those in Texas, look at that chart sometime. Everything is more expensive there. And you have a state income tax, which is not baked into these numbers either, right? So I don't see the trend turning any time soon. And I think they may actually get more profound over time, in my opinion.
That's great. The next question from James. It's still a good time to sell in Houston, James asks.
I'll let Ernest and Michael take that one.
I would say, I would ask another question. If you're selling like a primary, you have somewhere to go after that. Make sure that you have a home already set up, because all the money you make on equity, you'll put that back into another property. So that'll be my biggest concern. From an investment side, yeah, I'll say it's okay to sell for investment.
How about you, Michael?
I'm going to agree with what Ernest just said. As long as you've got your next destination already wrapped up, then I think it's a great time. And again, people, if you price it right, people will buy it.
Well, I know a lot of people are going to jump back into the rest of their day, but we thank everybody for taking time to join us here on the Catalyst Funding webinar today, the December market update that we're doing here on January 5th. What we want to close with is, first of all, to thank Michael for joining us. Thank you for being our special guest from Priority Title. Always great to have you on. Ernest, glad to have you on today, representing Catalyst Funding well. And one of the people you're representing is the winner of today's drawing. As you know, on every one of our webinars, one lucky listener on the call that joins us live will receive half off their next hard money processing fee. And today I'd like to announce that the winner of that drawing is Terry. Terry Ariola is our winner of the half off of the next Catalyst Funding processing fee. And we hope everyone joins us on the next Catalyst Funding webinar. And I know we have our special guest already set for the January webinar that will be at the end of January, as well as the February. And so we'll begin putting out on social media, on all channels, everything related to who's going to be on our next webinar. So be looking out for that. And if you're not following us on social media, be sure and do that. We'll keep you posted on everything related to webinars, regarding the market update, as well as all other things Catalyst Funding related, where we're going to be, even where we were maybe yesterday. You'll see where our loan officers are actively involved in networking out in the community, and we are excited to be working with great partners like Priority Title. And again, Michael, thank you for joining us today, and thank everyone for joining the Catalyst Funding Real Estate Market Update. We'll see everyone next time. Take care.
Everybody. Have a good one, Derek, Ernest. Thank you, guys.
All right, Mike. Thank you.
Thank you.